Hi folks, this is Hyman, and I wanted to talk to you about the power of candle patterns and specifically four very common candle patterns. And I'm just taking a general example from the euro dollar hourly chart, kind of blowing it up to where the candles are fairly big. And I just want to show you some candles, their attributes, and what they really forecast and tell you. Because candle charts really speak to you, unlike bar charts or line charts. They have data within them that tells you a high probability of what's to come. It doesn't mean they're a guarantee, but it means they're a very high probability. And that's all you need in the market to gain a very good edge. And so the first one is called a shooting star. By the way, all of these will be reversal patterns. So they're forecasting a change in trend. Formerly, this had been an uptrend, and it's going into a downtrend, and it is noted by the shooting star candle pattern. Shooting star, and what it is, it has a small body at the bottom and a very long wick at the top that is many times, 2 to 3 times the size of the body, and it's at the top of an uptrend showing a reversal into a potential downtrend. The next one is called a bullish engulfing pattern. And instead of focusing mainly on the wick like the shooting star does in a small body, this one is a 2-candle pattern, and it focuses only on the bodies of the candles. It doesn't care what the wicks really look like. So in a bullish engulfing, you have a small-bodied candle that is swallowed up by the next candle, which is a very long-bodied candle. So this candle swallows up this candle. So you'll have a very short candle body, short candle body, followed by a very long candle body, and that's a bullish engulfing pattern, and shows a reversal from a downtrend into a new uptrend. Then you've got the reciprocal of that, the reverse of that, which is the bearish engulfing pattern, and is at the top of an uptrend, just like the bullish engulfing is at the bottom of a downtrend, shows a trend change. This is at the top of an uptrend and shows a trend change. And of course, I'm talking about near-term trends here because there's a long-term downtrend going on this particular chart, but near-term trends that are short-term trading. In the bearish engulfing, it's at the top of this near-term uptrend. It's a small body candle engulfed by a larger candle that follows, a larger body candle that follows it. So remember, the bearish engulfing and bullish engulfing, it's only the body that matters, and the second candle's body has to engulf or be larger than the first candle's body. Whereas the shooting star and another pattern I'm going to show you here in a minute focuses predominantly on the wick. And I point out these patterns because they're high probability patterns that tend to work a lot, and they're easy to spot for the eye. For instance, before you learn candle patterns, sometimes this looks like a bunch of gibberish, but you can look for a very long wick, for instance, and that helps you identify shooting stars. And here's another one. We had an up move and then a shooting star, which shows a reversal of price that's about to likely head downward. Small body, long wick on top at the top of a move that was higher, showing a reversal heading downward, and sure enough, that's what happened. Then there's, if you were to flip a shooting star upside down, you would have a hammer candle, where it's at the bottom of a downtrend, showing a reversal to the upside. It's a small-bodied candle, and it has a long wick that is usually 2 to 3 times the size of the body. So again, you're looking for a long wick. So it's basically the exact opposite of the shooting star. It's at the bottom of a downtrend, shows a reversal into an uptrend, and the pattern is flipped to where the wick's on the bottom. The wick's on the bottom here, the wick's on the top there. So the wick's on the bottom in a hammer, wick's on the top in a shooting star. Sure enough, you have the reversal that heads up here. Here you have another shooting star. I won't re-explain that because we've seen a few of those. But you can see how accurate they are. It doesn't mean, again, that every single one of them will work out, but what it does mean is you have high probability trades, and you can place your stops usually a little just beyond the wicks in your trade. You know, and that goes for really the hammer or the shooting star. In the bullish or bearish engulfing, I would place stops, you know, a little below the wick of the small or large candle, whichever wick goes down further, and the same thing for the bearish engulfing. You know, put your stop a little above the wick, the highest wick of whichever the 2-candle pattern is higher. And so these are just some very very accurate candle patterns that if you've never used candle charts before, if you've always used a bar chart or a line chart, I would encourage you to use a candle chart because there's extra data, extra information. It's almost like candle charts try to speak to you and tell you what's going on. It has its own language, but once you learn how to interpret it, it tells you where it is very likely that the market is going next. So thanks for watching, and also feel free to click on the link below and find out more about my trading service. Thanks so much for watching. Bye-bye.